Hey everybody. So in this video, I want to delve deeper into Evolution's quarterly earnings report. The company reported earnings yesterday. Yesterday, I highlighted PayPal's positives and negatives for the quarter, right? And now it's time for me to discuss Evolution. All in all, it was a very, very weak report. And sure enough, the price collapsed 20% after the report was released. So something happened here, and we have to talk about it, right? So for those of you who don't know, Evolution is my second largest position, and so I have a big exposure to this company. And as a shareholder, as an attentive shareholder, I want to know what happened. And then at the end of this, I will make a decision as to whether or not I should keep shares, I should buy more, or I should just sell out of my position. So what is Evolution for those of you who don't know, and why did I buy the company in the first place? Evolution is the world's leading B2B provider of online casino solutions. They are not a game. They are not. They are not a games. They don't provide the games to the end users, right? So they supply those games to the casino operators, who then of course, offer those games to their own end users. So they don't have a direct a relationship with the customer, if that makes sense, with the end customer, with the end user, if that makes sense. And the reason I bought it is because this market, the online casino, the live casino market, is expected to grow at a CAGR of 12% by 2030. And Evolution stands to benefit because they are the leading company in this field. Okay, so they do have a moat in that regard. They are the first. They essentially developed. In fact, they have the advantage of being the first in the field, right? So this all started with Evolution. AB. They are accredited with starting the online casino experience. And what we are seeing is that this segment is growing very rapidly compared to, for example, to other segments, right? Compared to traditional casinos. And sure enough, their margins are absolutely amazing. So, and it goes to show how powerful they are. But we will talk about that as well as we dissect the quarterly report. So let's start with the positives as we normally do. So what were the main positives for this quarter? Look, the positives were, so we have strong growth in regulated markets. Let's go to the report right here. Where is the report? This is the report. We will comment on the CEO's comments as well, which I think is important. But first, let's start with this. Okay, so if I continue to go down, you can see where is this? Let me see. Okay, so regulated markets. This is it. This is the share of regulated markets. And part of the reason the company was a risky bet initially was because at the time, well, when I invested in the company, about 60% of their revenue was generated from unregulated markets. These are why is this risky? Well, it's risky because if at one point in time those markets decide to regulate the online casino experience, then that can be costly for the company, right? We don't know what those regulations entail. It can mean, for example, higher taxes. It can mean that, for example, they may even decide to ban the online gambling experience altogether. So this all represents a risk. But at the time, so 60% of their revenues came from unregulated markets, which means that only 40% came from regulated markets. Right now, we are seeing a shift in the right direction. And so, for example, you can see the share of regulated markets this quarter is up 45%. And in January, March 2024, it was only 39%. So we are seeing a positive shift in what I believe to be long-term sustainability, okay, in this regard. And that's why I pointed this here. revenues from regulated markets grew 19% year over year, while revenues from unregulated markets declined 6%. So this strategic shift reflects Evolution's commitment to long-term sustainability amid increasing regulatory scrutiny. This is something that I like to see because part of the reason the company was always perceived as risky was exactly because of this, because they had a big exposure to unregulated markets, and look, this can be a positive as well as a negative, but my thoughts initially was that those markets don't want to ban the online casino experience because governments want money, of course, and this is a very profitable industry. And so it makes sense that they want to implement regulation so they can get a cut. Yeah, so that's how I decided to. So that's why I decided that that was not a risk, in my opinion. But yeah, it's certainly something to keep in mind. Now, studio expansion. Two new studios were launched in Romania and New Jersey, with plans to open 3 more studios in Brazil, Philippines, and Michigan. These investments enhance geographic diversification and capacity to meet global demand. And this is very important. This is a company. One of the things that I wanted to know is there any change to the product? So before selling any shares, I have to ask myself this question. Have the fundamentals of the business changed? Or is there still growth for what they're offering? Right? And what do? Exactly that. So they offer games, the gaming experience, right? And that's why every single year they release a ton of new games, as you can see right here. So the company is planning to release over 110 new games in 2025. And what this tells me, in conjunction with the studio expansion, is that there is still the commitment from the company to providing a very good user experience, right? To release new games, to stay at the forefront of innovation, while expanding operations to meet global demand. And this is important. There is global demand. We will talk about that later as well, but you can see this is the revenue breakdown. And you can see that this is January, March 2000, that's this quarter, right? You can see that even though there was a decline in Europe, and we will talk about this in further depth, but you can see that overall there's still growing demand across all regions. So, for example, Asia jumped from 197 to 201. North America, that's a significant jump. That's, I think, a 15% jump. I did the math. That's almost a 15% jump. So you're right. So it's 62 to 71, and then Latin America 33 to 36. And so in other 17 to 21. So outside Europe, there's been strong demand. Well, there's been demand. There's been growth across all the regions, which is a very positive thing to see. Now, it's true that growth has slowed down. We'll talk about that as well. But you can see that there is still there is still demand for the products. People want to engage with the games. They want to have a nice live casino experience. And look, Evolution is the best player in the field for sure, right? And so I see this as a big positive. Now, maintain EBITDA margin guidance. Okay, so Evolution reiterated its full-year EBITDA margin target of 66% to 68%. This I marked it as a positive because profitability collapsed this quarter, as we will discuss in the negatives. But this deserves a question mark because profitability. So EBITDA margin this quarter stands at where is it? EBITDA margin stands at 65%. Yeah, stands at 65%. And so for them to say that they expect EBITDA margin to stay around 60, to increase to 66, 68%, considering all the headwinds the company is facing. This is something that I'm going to have to monitor closely and to see if management is actually being fully transparent with us, right? So it's very important for us to track this, and if they really deliver on what they are saying right here. Now, candid management commentary, and this is something that I really like to see. The CEO Martin acknowledged, "I'm not happy with the financial development in the quarter." Okay, so such transparency reinforces management credibility even in a challenging quarter. If I go here to the CEO's comments, you can see that those comments were made at the end right here. Needless to say, I'm not happy with the financial development in this quarter, but one must take into account that the results are impacted by necessary steps that contribute to our mission to ever increase the gap to competition. So this is good, okay? The results were not good, and they are blunt about it, which is something that I like. Now let's delve into the negative, so you can explain some of the things that we discussed here to provide more context. First of all, we have a revenue miss. Remember, revenue and earnings fell short of analyst expectations. So revenue grew just by 3.9% year over year, missing analyst expectations by approximately 4 percentage points. This already marks one of the slowest quarterly growth rates in the company's history. So it's not something that I like to see, as you probably understand, especially for a company that is active in a secular market, right? There's a lot of in a market that is expected to grow at high rates. This is something that I don't like to see, and we are talking about the leader in the space. Now we see a deceleration across all regions. Yes, there is still growth, okay, but however, growth compared to previous quarters has slowed down. So, for example, in Europe, which is still the biggest market, growth fell from 9% in quarter 4 2024 to a minus 0.7% decline in quarter 1 2025. And in Asia, growth slowed to 2.2%, down from 11% the previous quarter. Growth is slowed down. All right. And I have this here, but we have to discuss why the slowdown occurred. These slowdowns were primarily driven by, we still have ongoing cybercrime related disruptions in Asia, which the company highlighted, which the company started fighting a few quarters ago. Okay, but these issues are already being tackled. But remember that Asia is the biggest market, right? And so, in fact, Asia is still the second biggest market. And because they are still facing cybercrime-related disruptions in Asia, revenues there have been pretty much flat. Okay, not good to see. But the company is already implementing the necessary steps to tackle those. Currency headwinds, of course, this is understandable for a company that operates across different markets and deals with different currencies. And then this is probably one of the main highlights from the quarterly report is that the company has taken proactive exits from unregulated European markets amid the UK Gambling Commission investigation. So, in other words, the company's main market is Europe, okay? And that's where they derive most of their revenue. And what Evolution did comes on the back of an investigation that started a few months ago by the UK Gambling Commission. This started in December last year. The regulator found that Evolution games were being provided to unlicensed operators in the country. Okay, This was not good. So at the time, and still right now, the UK only accounts for about 3% of the company's revenues. But look, this is a red flag, right? Because if it happened in the UK, then perhaps it could happen in other markets as well. And the company now has decided to proactively exit unregulated markets. And given that Europe still accounts for 36% of Evolution's overall revenue in quarter one, of course, these actions are expected to impact growth and profitability. Right? I wasn't expecting something different, but the important thing for us long-term investors is that management says, and this is very important, where is it? Yeah, so it says right here, but one must take into account that the results are impacted by necessary steps that contribute to our mission to ever increase the gap to competition. It takes hard work in all areas, staying ahead in the ever-changing regulatory landscape, moving our technology, the best products in the world, okay? And so they believe the proactive steps that they are taking are going to deliver big positives down over the long term. And this is a management theme that, for example, one of the things that they are very transparent about is that they are more than willing to sacrifice margins over the long term in order to increase market share. They are very aggressive in their expansion, in their in their expansionary efforts, right? And they are willing to sacrifice margins because they want to increase their market share, and they know that over time margins will then improve, right? So look, it's not great to see, okay? And they discuss this in further depth in the CEO talks about this in comments in the comments that you can see. But look, to create a long-term sustainable regulatory environment in which the end users are protected while also having an entertaining gaming experience is a balance of those parameters. And so I think over time, it makes a lot of sense. Okay, I like to see this happening. And again, don't forget that the share of regulated markets is increasing while the share of unregulated markets is decreasing. So I think this is a positive as well, even though it really crushed profitability and yeah, so that's why I have this as a negative, right? We have a big profitability miss. Key margins, all of them fell short of analyst expectations. Look, EBITDA margin is down to 65%, operating margin is down to 58%, and net profit margin is down to 48%. If I go to the previous quarter, and I can see this here in the report as well, let's see. I have to scroll down. Yeah, right here. So look, quarter one, 2025, adjusted EBITDA margin was down to 65%. It came back down from 68% in the previous quarter. Operating margin, you can see, is at 58%. It was 66%, almost 67% in the previous quarter. And look, it's not great. So margins are under pressure exactly because of that, because revenue declined, right? At the time they are facing these issues in Asia, and they have pulled back from many unregulated markets across Europe. And then what we also see that also squeezed margins was rising costs. And this is understandable because they continue to expand their operations, and their main operating expenses are in the form of labor costs, right? So we have personnel costs, and because they have to open new studios as well, and to open new tables, all of that accounts is included within operating expenses, and so operating expenses increased by almost 20% year over year. So we have revenue declining while operating expenses are increasing, which squeezes profitability, understandably. Okay. Now, another thing is a cautious outlook for quarter two. So they said that actions already taken in quarter one, for example, market exits, compliance adjustments, will continue to weigh on performance in quarter two. But then after that, we should see an improvement. And so it's something that I'm going to have to keep in mind as well, as a shareholder. But what is my main conclusion right here? This is my main conclusion. So while Evolution AB reported one of its weakest quarters in recent years, the company remains strategically focused. The 9% growth in regulated markets, combined with aggressive studio expansion and a strong game release pipeline, show a clear long-term growth agenda. However, challenges like these ones that we have already discussed will need to be monitored closely in the coming quarters. And yeah, look, it's something that I'm going to have to monitor as well. But another thing that I like to see is that this company continues to be very, very profitable. So the core operations of the business are sound. They still are still strong. And if I go here to the consolidated balance sheet, that you can see, no, not the balance sheet, sorry, the cash flow statement right here. This is their operating, look, cash flow from operating activities. You can see that it jumped from 301, so 301 to 361. So this is a significant jump. Okay, so this is a company that is still it's still generating a lot of cash from its operations. It's a cash machine, and I think the future is going to look very good as more regulations are implemented. This means that many funds, for example, will be more confident deploying capital into the company. And remember, I think one of the main reasons the company is not attracting a lot of investors' attention is because they are still very exposed to those unregulated markets. As this changes, I expect more capital to flow into the business, provided the story doesn't change, and they are still expanding. Okay, so once I believe the situation in Asia will improve, and so will the situation in Europe. I think these are short to medium term headwinds, but all in all, I still think the company's growth trajectory is intact. Remember, they are the biggest player, the best and the biggest player in the field, and I think they stand to benefit from the growth that this industry is going to continue to see down the line. So, look, it wasn't by all means this was a very poor weekly report, but I'm not selling my position. I'm not adding to my position either. I'm going to be waiting for the next few quarters to decide whether I should increase my exposure to the company again, or if I should sell the shares. Okay, so I want to see an improvement. I want to see things improving going forward, but for now, I'm not selling. So you already know my conclusion. Look, I hope you liked this in-depth the way I dissect the report. And I do hope you managed to make sense of it. If you like it, please let me know in the comments. And I'm not sure if you are an Evolution shareholder yourself, but if you are, just let me know as well, so I know that I'm not alone. And yeah, and happy investing. Let's see what the future brings.